Good morning and welcome, everyone. I'm Tom Bowley, Chief Market Strategist at earningsbeats.com, and this is Trading Places Live. It is Tuesday, December 10th, 2019, second day of this week that historically is not a particularly good one for U.S. equities. Futures are down a little bit this morning. We'll get into all that in just a couple minutes. But we will first go through the agenda today. Got a number of things want to go over. Of course, we'll do the daily market recap. Take a look at what's going on with earnings. There were a couple of reports out overnight, big one this morning. And then we'll get into upgrades, downgrades, and break it down. I'm going to break it down. If you haven't seen this segment before, it's really just how I go about finding an area of the market and then figuring out, okay, what do I want to do with it? So I would literally break down that area. Today, I'm going to look a little bit at small caps and energy. So we will be looking at that later in the show, and then we'll wrap up the show with 3 you must see. That is where I give you 3 stocks that I think look interesting on the chart. They could be trade candidates, just could be something educational, but we always go over 3 to end the show. Before we get into all of that, though, I do want to tell you about Market Vision 2020. It is coming up. I know it seems like it's still a ways away, but it's going to be here before you know it. January 4th, Saturday, January 4th. Getting together a bunch of my StockCharts colleagues. We're going to be giving you our outlooks for 2020. It's all going to kick off with John Murphy as keynote speaker. You can go to earningsbeats.com to register. All you do is you go to the top of that screen. When you go to earningsbeats.com, there'll be a tab for Market Vision 2020. And when you click on that, you will see this, the Market Vision 2020 screen. And you go down here, simply put in your name and email. There's no charge, just to register. You'll get a lot of information about the event. You'll get information about the speakers. You will get, you'll be eligible for free giveaways. You'll learn about how to save on the event. We have an early bird registration going on right now that will last probably about another week, maybe a little less. So you want to go in there and sign up, get the information. And there are free mini-series events that the various speakers are hosting. Most of those are going to be on Fridays. Greg Schnell is going to be with us this Friday. And all you have to do literally is just sign up with name and email address, and we will send you room instructions for that event with Greg on Friday. All right, let's take a look at what's going on in the market, or what has been going on in the market. And you can see yesterday was a little bit of a down day. I wrote about this in my Trading Places blog article. This is not a great time of December. December, historically, is a really good month. But this particular time of the month within December is not so great. So we do want to at least recognize that this is a week coming up that we could see some additional weakness and some selling, a little consolidation. I don't expect anything big, but I wouldn't be surprised to see the market pull back here. The Dow was down 100 points yesterday. You can see the S&P down almost 10. The NASDAQ down 35. And once again, just slightly, but a little bit better on a relative basis was the S&P 600 small cap index, losing just 3 points. Back down to 999 after closing above 1,000 for the first time in 14 months yesterday. So a little bit of profit taking. I still think this is a group, though. Small caps love the month of December. And I think we're going to see some more strength out of this group going forward. 10-year Treasury yield down 1 basis point today, 1.82%. Still just kind of sitting in the middle of this range. You can see the lows back a few months ago below 150. Recent highs just a little bit short of 2%. And now we're in the middle. It would be extremely bullish for the market, for the equity market, if we see a breakout in the yield. That would signal rotation away from that defensive bond market. But for now, just kind of going sideways, not really giving us any major clues. As far as the sectors go, leading to the upside, not really going very far, but at least finishing in positive territory yesterday, we had real estate, consumer discretionary, and consumer staples. Some of the consumer names haven't been doing so good, so it was nice to see these 2 groups at least finish in positive territory yesterday. To the downside, areas that have been leading the market recently, you can see healthcare. Been on a huge roll over about the last 9-10 weeks. Did lose almost 1% yesterday. Still not bad when you consider how far we've been. And leading healthcare to the downside yesterday was the medical equipment group. Medical equipment stocks dropped about 1.5%. But again, they've been very strong. I think you've got great support down here around 1950. That's where the group broke out from on a pullback, held that level. But first, even before we get down to that level, you've got the rising 20-day moving average here. So I think things look pretty good there. Getting back to that 10-year Treasury yield, this morning we did have Q3 productivity out. It came in a little bit below expectations, down 0.2%. The market was expecting a drop of 0.1%. Kicking off today is the FOMC meeting. We've got a 2-day meeting. The announcement policy or the policy statement will be announced tomorrow at 2 p.m. Eastern, and it's highly likely that the Fed will do nothing at this meeting. I think it would be a shock to the market either way if it were to go up or down. I'm pretty sure we're not going to see a rate increase, and I don't think we're going to see a decrease here. That would be a little shocker. Earlier this morning, I saw the German DAX was down. It has rallied back off the earlier lows, but anytime the DAX is down, the tendency is that the S&P 500 follows suit. And currently, we do have the futures pointing a little bit lower this morning. Last check, I'll give you the futures here. Well, we got the Dow Jones right now actually up 35. The S&P is up 450. There was a report that came out that said that the U.S. and China are planning for a delay of the December 15th tariffs. So the market was anticipating the additional tariffs taking place on Chinese goods on December 15th. And it looks like they're at least considering pushing that back and seeing a delay. Anybody surprised? I'm not. This is literally how things have been going for the last couple of years, just kicking the can down the road, and we'll see what happens. And I don't see a date that's been announced, but it looks like maybe they're just going to push it back a bit. That certainly has helped futures. Like I said, Germany, the DAX is down, but it's probably down half of what it was earlier this morning. And Dow futures, which were down 100 points earlier, now up 40. All right, as far as that 10-year Treasury yield goes, you can see here, I just drew this line in here, maybe a little bit of a trend line. And then also you've got this gap support from back in October. And then we came down at the end of October, early November. You can see just about got to that gap support before moving back up and putting in a new high. So I would expect if we do drop again in the 10-year Treasury yield, maybe if there's more talks about the trade war, blah, 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 maybe we see this move back down into that 165, 170 area. I would be surprised if we go much lower than that. Ordinarily, if we did, I'd say that would be horrible for U.S. equities. I don't know that it will be, though. I think the market is still considering the possibility with low inflation that we could have a great environment of moderate growth and lower than expected inflation, which will keep the Fed from raising rates, possibly even lowering rates. And that would be a positive. So equities wouldn't necessarily be hurt by this move down with the 10-year Treasury yield. However, any move by the yield to the upside, I think, would be an indication of significant rotation away from the bond market and into the stock market. So that is certainly something for all of us to keep in mind and watch closely. Let's take a look at a couple of charts here. I'm going to pull up the XLY. This is the consumer discretionary ETF. And the reason I'm bringing it up, you can see it's been in an uptrend. The market's broken out. A lot of sectors have broken out. Consumer discretionary has not broken out. But it's not in a bearish formation. It actually looks like a pretty good, maybe ascending triangle. Not quite equal highs, but you got similar highs, rising lows. So that looks a little bit like an ascending triangle. Breakout would be bullish. And perhaps we might even see, I'm going to show you a relative strength chart of the XLY versus the S&P. And you can see that because we haven't been able to make that breakout while the overall market has been breaking out, the relative strength in consumer discretionary has been deteriorating. But we might be trying to carve out a bottom here and turn back to the upside. So if we get this price breakout, watch the relative strength and watch to see if we can get back through this 20-week moving average to the downside. So this is a relative moving average. But if you can get back above that 20-week, you can see you can do a lot of good things when you're above that 20-week. When you're below it, it's either consolidation or it's a flat-out downtrend. So we want to continue to watch consumer discretionary. Number one, does it make the breakout? Number two, can it regain that relative momentum back to the upside? Within consumer discretionary, and this may be one of the areas that holds the clue, I'll go into the industry groups and let's take a look at clothing and accessories. Now, we've seen this once before where we come off a bottom, put in a nice move through the 20, we fall back and we move higher, and it was right back here. Earlier in 2019, looked horrible. We were taking a big hit just like we took back in July, August. We rebounded nicely, went through the 20, looked like we were rolling over and went back through one more time to the upside. Same thing, went through the 20, rolled back over one more time to the upside. But I think if we were to annotate this, that relative trend line is probably pretty close. Well, maybe a little bit above that 50. But if we get back up, you can see that failure just above the 50. If we get back up and go through that 50 again, we want to clear this relative downtrend line. So this is going to be one of the key areas, I think, within the clothing and accessory group. And when we look at it on an absolute basis, we've got that April high to negotiate around 352. If we get through that, there's not really any other resistance until we get all the way up close to 375. So I think this is a group to watch, and this could be the one area that helps us determine whether or not we can get that breakout on the XLY and whether or not the relative strength resumes in this group as well. All right, one other group I wanted to just show you, and that is software. Now, software, if you look at it on a, whoops, that's not, I don't need the clothing and accessories. Let's move this one too. If you look at software on an absolute basis, it's broken out. So it looks great, looks like it's the leader that it's been. But when you look at it on a relative strength, we haven't gotten that breakout yet. So this could simply, and we're rolling over after approaching it. So it could simply be that we consolidate for a little while. Maybe this relative PPO works its way all the way back down to the zero line. It got close a couple months ago. But this is an area that I certainly would be watching closely. Can we get that relative strength breakout in software? If we do, software is an area we absolutely want to continue to be a part of. And even if the market's going up and software is just kind of going along for the ride and consolidating, not a bad area to be in as well, especially if you get a leader within the software space. That's key. But the overall group doesn't look bad. It just, the relative strength doesn't look as nice as that absolute strength. All right. Small caps. And I'm going to talk a little bit more about this when I get into break it down. But I do want to mention in my article that I wrote in Trading Places yesterday, I talked about the fact that the S&P 600 small cap index was breaking to this 14-month high, which I think is very important technically. And then when you take a look at the seasonal chart of the same index over the past 20 years, you can see November, December tend to be a really nice quarter, or a really nice couple of months within the quarter. Throw October in there, and it is a nice quarter. The best quarter of any of the four in terms of historical strength for small cap stocks. So that's important to know. It's 4.4% average return during the October to December period over the last 20 years. But, and this is something I think is pretty important right here. When you look at the Russell 2000, which is a different measure of the small caps, and I have the Russell 2000 in my Excel spreadsheet that I've been tracking since 1987. If you look at the December, or the first half of December performance on the Russell 2000, you'll see that it actually has a negative annualized return of minus 8.61%. Now, I'm going to go in and just give you a couple of other numbers here. From the 7th to the 15th, the Russell 2000 has posted an annualized return of minus 43.16%. The 7th to the 15th. It is December 10th today. So that's what I was referring to at the beginning of the show, that we are in a week where historically the market struggles leading up to the 15th. Now it's kind of odd, and it doesn't really it doesn't jive with what we've seen in other months of the year, because normally when you get past the 15th of the month, especially when you get past like the 18th of the month, things tend to be pretty bearish. But in December, it's like, I don't know, maybe holiday fever, But look at that December 16th to 31st. Russell 2000 has an annualized return of plus 67.6% over those 15, 16 days. That's as impressive as any time during the year. So we just need to work our way through this next week. I'm very bullish the market. I think short term, I'm a little, cautious because of history. But I do think the market goes higher. And I think by the end of this year, we're going to be over 3,200 on the S&P 500. I said 3,225 a while back. I'm sticking with it. I think we will move above 3,200 before the end of the year. All right, let's see. Next up, let's move over to earnings. We did have a few companies reporting, and so let's just go in and take a look first at. Let me give you a couple of these that have moved in pre-market here quite a bit. We talked about software, and I was a little concerned about this stock going into its earnings. MDB, MongoDB, they did come in better than expected. They lost 26 cents per share. Market was expecting 28 cents, and the stock is up 7.6% pre-market. So from here, that would be probably, $10. We're probably looking at about a 140 open, 141. That, to me, is not a breakout. I mean, it is nice to get back up above that 20-day moving average, but I think at best we're going sideways right now. And if I pull this up on a relative chart, you'll see that MDB, software moving up, MDB relative to software has been moving down for a while. So it'll get a little bit of a relative pop here. Will it be enough to get us above this triple top? If it isn't, and you start to see the selling come in after the open, I would be careful, because you do have a stock that is downtrending relative to its peers. Next up, KC Stores. This one actually surprised me as well. I thought this one might have a better report. They did beat bottom line, by the way, $2.21 versus $2.10, but the initial reaction right now in the market is down 7.3%, or at least these percentages were as of maybe a half hour ago. But 7% is going to take the stock down probably close to this 165 area below the 50-day. I would like to see it come back up and close above the 50, but worst case scenario, I do not want to lose the lows back in the beginning of October, so let's watch those levels. Toll Brothers, a home builder, came out with their earnings. They also beat on the bottom line, $1.41 versus $1.29. Stock, even though it is breaking out here and the volume was good, down about 1.5% today. In pre-market. So it looks like it maybe is going to come back. Perhaps we'll get a 20-day test, but the way we close today will be really important. You can see Toll Brothers, the group's not been bad. Home construction actually has done pretty well, and historically, this is odd, but historically, home construction loves the winter months. It wouldn't seem to make a whole lot of sense, not common sense anyway. You'd think home construction wouldn't do that well. Look at November, December, and January. That is 11% on average, November, December, and January over the last 20 years. It's by far the best 3 months of the year, November, December, January. Again, doesn't make a whole lot of sense, but it is what it is. So there's Toll Brothers. Two more to go here. Let's take a look at SFIX, which is Stitch Fix. Really nice reaction here. This stock, and you can see that it is very volatile. Huge gap up in March, gap up in June. September, not so much, but this time we're getting another gap up, 10.6%. Stock came in, earnings per share was flat, and the market was expecting a 6-cent loss. So that positive surprise certainly leading to some buyers this morning. Stitch Fix up at last check, 10.6%. Looks like it's in a very nice uptrend. I imagine you're going to see a lot of volume on the stock today as well. Last one I want to mention is AZO, AutoZone. Here was one that's been in a really nice basing pattern here. Sideways consolidation after an uptrend. I thought overall AutoZone looked pretty good relative to the specialty retailers. They crushed their bottom line, $14.30 versus $13.69. And they are up 5.4% pre-market. So we are getting this breakout on AutoZone. I think that we'll have to see how it trades after the gap up. But either way, I have a feeling this is going to bode well for the stock going forward. All right, upgrades and downgrades. We've got a few here to go over. Because I am going to talk about energy in a bit, I thought I'd mention a couple of energy stocks that were upgraded today. First up is Devon Energy, or Devon Energy, DVN. Stock has been downtrending here, and relative to its peers, it's been downtrending, although about the last 6 weeks, we have seen it turn back up. I don't know if that is necessarily going to be anything that's going to result in a lot of strength ahead, but it's worth noting because if we can get through $24, that is the latest resistance area. I don't see much until we get all the way up past 28. So with this upgrade, if we can get through 24, I think DVN could, at least in the short term, maybe make a run toward that 28 level. HES, HES, another one being upgraded. This one I like a little bit better because the relative strength. You can see we bottomed almost a year ago in relative strength. This has been a stock that has been uptrending for quite some time. Recently has pulled back, but held on to price support. I think given the way the overall energy market has been performing, simply going sideways is not bad. In fact, it's got a little bit of an upward slant here. So I tend to agree with this upgrade on HES. I think we're going to make a run for these moving averages, and a break above, I think, could lead to another test of that 72.5, 73 level. RDFN, this is Redfin. Redfin gets upgraded today. It did just make a breakout 2 days ago, pulled back yesterday. I think on a relative basis, starting to show a lot of strength. Yeah, I'm okay with this one. I think this has got a shot to go up and challenge that 23.5 level. Downgrades, I do want to mention Netflix got downgraded again. Lots of folks really not impressed here with Netflix. And this downgrade could send this stock back down below the 20-day moving average. And that just doesn't look good to me here. I'm still a little cautious here. Look at the relative strength, been turning back down again past couple weeks. I don't know. Netflix just doesn't seem right to me just yet. I'd stay away. MKC, McCormick did make the breakout here in the last week, looking pretty good. Relative strength, not bad. I don't know about this downgrade. I think I would have to argue with that one. I think MKC looks pretty good. All right, let's move it on to break it down. I wanted to look at small cap energy, and this is why. Number one, if you pull up that small cap index, you can see that there's the breakout that I referred to earlier, or the IWM that tracks the Russell 2000. There's the breakout. So we know small caps are in favor, technically. We also know small caps do well in December. That is a historical fact. Doesn't mean they go up every year, but they do like the month of December. It's the best month of the year for small caps. So we got all that going in our favor. And then if we take a look at the sector, I'm going to pull up the sector relative strength again, and let's pull up energy, take a look at what we're doing here. We've been in this downtrend for a while, but I think the dollar is going to go down, which to me suggests that we could see some relative strength in energy. Now, I'd love to see us in energy get back up above, say, about 61.5. That would certainly help and start to break this downtrend that we've seen throughout 2019. So there's some things that we need to do to get there for energy, but I think that this is something worth considering. The other thing that I believe is worth considering is that when we look at the small cap energy versus the large cap energy, you will see that we actually got a little bit of a bottom here coming in, and we're starting to trend a little bit higher. Now, on the weekly chart, it doesn't look like much, so I'm going to put this over onto the daily chart and just put this on a line chart as opposed to a candle chart. But here you can see only for the second time in, since May, that we have seen the small cap energy ETF relative to the large cap energy ETF. This is the first time since September and only second time since May that we have seen this relative line move back above the 50-day moving average. Now, the last time it failed, but keep in mind, again, this is the time that small caps are in favor. I think this one could run a little bit. So the question then becomes, where do you go? If you think that small cap energy may do well, well, one thing you could do is just buy the PSCE if you like it. But if you wanted to go into individual stocks, if you go under member tools to Scooter reports, now it's in Scooter order. I go to small caps, and then I type in energy. Now, this will bring up some companies that are in other areas that just have energy in their name. So advanced energy industries, technology, infrastructure, and energy alternatives, industrial. So in order to get rid of that, you can click on the sector column. And now I've got energy in scooter order, small caps. So this is one way to do it. Now, I'm just going to pull up a couple of stocks real quick here, but I think a stock like ENPH, this is one that got hit pretty hard with renewables recently, starting to strengthen again. Watch that 20-day moving average to the downside. But this stock on a longer-term weekly basis, you can see after it makes big moves, it consolidates for a while and then makes another move. We're going through this consolidation. Weekly PPO still above zero. So yes, that last pullback was pretty tough over the last few months, but I would not give up on this stock yet. I think it is starting to turn back around again. Let's take a look at, let's go with HLX. This is one that I actually wrote in my article. I had asked if you wanted to subscribe to the Earnings Beats Digest. I was going to write about a small energy stock a while back. Well, on the pullback back in here when it was getting close to this gap in price support, this is when I wrote about it. It is starting to turn back around. The volume's coming in. If it breaks out above 975, this is one you really want to pay attention to. I think it could run. And then the last one, let's pull up another one. This one I gave to Earnings Beats members in the daily market report just a couple of days ago. Intraday, it was approaching $6. And I said, this one is really starting to look good. It had been in this downtrend for a while, but look at all the volume coming in this move back to the upside. It made that breakout above 6, went up another 2% yesterday. It's hard, you got to be willing to take some risk here because it could be volatile, but any kind of a 20-day test here on MR would look interesting to me. All right, let's get into the 3 you must see. Going to go through these kind of quickly. The first one is DPLO. The first thing I want to just point out here is when you see a stock that looks this ugly with all these big drops, be careful. Here we had a big drop back in November. We come rushing back up. Anybody getting in at the low, maybe value investors think they've got the best thing since sliced bread. Well, right about the time we filled that gap, the next drop hits. And I didn't see the news, but look at the volume coming in. Stock lost 1/3 of its value yesterday. Pay attention to these gap support and gap resistance levels. Next up, KOS. This is Cosmos Energy. This was one I was looking at yesterday, and it's got mixed signals here. Number one, it had just recently broken out the new highs, so I thought, okay, when I saw it, it was down around 475 yesterday. Big volume, and I thought, well, it opened above support. If it could close back above support and leave a long tail, might be marking a bottom. Well, it didn't quite get back up to that 525 level, finishing at 519. Yes, there's still a long tail, big volume. I don't like it when they don't close back above the support level, though. So my thinking on this one is it probably goes lower. I'd be careful, but this is one maybe just to watch from an educational perspective as well. Does that slight breakdown at the close lead to more weakness, or does this long tail lead to a recovery? We'll see. My final one for today, I really like this chart. Teleflex, beautiful move up to the upside. I'll go ahead and pull this up on a relative chart as well. Here's your move up to the upside. It's in the medical supplies area. Of course, we know healthcare has been strong. Look at this nice cup. And it came down yesterday on light volume. It was down 3%. 20-day moving average off of a cup. A lot of times that's where a handle prints. I would keep an eye on TFX. I think this one could be setting up for a nice move. A breakout above about 372 would measure up 60 points from there to about 430. Keep that in mind. All right, that is it for today. Certainly appreciate everybody coming in. Have a great day. Be careful this week. Again, it's not a great week for the market, but I'll see you again on Thursday. Take care.